Okay, so many beginner traders don't understand how fundamentals work. You only need your technicals to align and price action for you to take a trade. As of right now, personally, my trades are around 70% pure technical analysis and 30% fundamental. As I gain reason and understand how and why the market moves, fundamentals come into play and help you get the best execution for your orders. So a site I use is Forex Factory. Today I'm going to help you at least get a little bit of knowledge on how you can decipher the news and the calendar so that you can know where price is headed to and why it's headed towards that area. Okay, so red folders are high impact news, and a rule of thumb is to stay out of trades during a red folder. You can trade your account before and after the news, but you cannot trade during the news, because as such important figures speak, the market reacts horribly. It reacts very volatile and can take you out of the position. Basically, price whipsaws up and down. You can get 100 pips move, hits your stop loss. You could basically lose your account trading red folders. So for the pairs I trade, which is GBP, JPY, and the gold. So gold, first of all, you wanna look at news that involve the US dollar. So when the US dollar is high, gold goes down. You could take notes which would help you. When the US dollar is down, gold is up. So that is as simple as I can keep it. So let's break down how you can get this information from news. So as let's say last week was a very volatile week. It had a lot of events. So when you see news that involves USD, it directly impacts gold. So for instance, USD FOMC projection, FOMC statement, federal funds rates. So the US government, not US government as such, but the Federal Reserve, the Feds, when they increase the rates, the price of gold goes down. This is because this action strengthens the US dollar. You can watch these effects on the DXY, which is the US dollar index. As price goes up on the dollar index, gold is going down. And for this week, if you're watching this as of now, this week we're expecting gold to be only sales. You can watch my entries on the free telegram. This is because the government is hawkish on the USD. What I was trying to put across is when the USD is hawkish basically means the interest rates are getting higher and higher. The effects of this is that gold goes down. Simple as that. Okay, so another thing, looking at GBP JPY, we had the BOJ policy rates. So BOJ is basically Bank of Japan. So when Bank of Japan reduces its rates and Bank of England increases its rates, the GBP JPY ought to move bullish. So I'm trying to look for words to explain it in better detail. Hope you can get what I'm trying to say. Any questions, ask in the comment section. So this week, an analysis on this week, the GBP JPY moved down, but we expected it to move up. Why did this happen? This is because the Japanese government intervened for the first time in around 20 years. The last time they intervened was 1992. Such an intervention is bound to have short-term effects and make the yen strong for the short term. But once this information gets priced in, you want to see the pound yen go up. Also, what made it drop even further was that even though the Bank of England increased the rates and kept their remarks hawkish, which makes a stronger pound, it still dropped because there are UK worker strikes, and the new Chancellor and Finance Minister of the UK gave out a new tax cut. Such an event, the last time it was done was basically over 30 years ago, 1970s or 19, around there. Don't quote me on that, but the effects were devastating. So they're basically gambling on the economy, and cutting taxes cost them around 45 billion pounds. So this made the sterling weaker this week and the yen stronger, but this is only short term. So you can get your scalps for the short term as you wait for premium buys on better zones for buys. So that is basically why the GBP/JPY yen had a pullback. Okay, so that's how you can use the Forex Factory to decipher or understand why and how the market moves. It's not always these red folders that you should look out for. Always keep an eye on the news tab. As of now, you can see Putin. When Putin talks, it affects gold because gold is a safe haven, and Russia have reserves of gold. You can watch that as Putin speaks. You can watch price action on gold and watch it. If it moves up or down, helps you decipher the markets pretty well. Also, another thing I realized, if you trade London sessions, you also want to look at the pre-market data and stock market opens. When the stock market opens and there's 50 plus points, this basically means that investors are bullish. Therefore, gold will fall because gold is a safe haven and investors are moving away from commodities and into equities. That's how you want to understand the market. For New York, around, if you're trading gold, New York at around 8:20 Eastern, there's the COMEX. This is a commodities exchange open. You can watch the data and can help you use that information in your trades. 8:30 is when the New York opens, so you can watch the stock market data as it opens. If it's bullish, watch gold fall. If it's bearish, watch gold rise. Simple as that. I hope I've done the best to help you at least understand the fundamental parts of trading. I'm also still learning. No one knows everything, but you have to grind to understand how the market works. You cannot only rely on price action, because when you get taken out of trades, you won't understand why. So with that, hope you enjoyed this video. Leave a like, subscribe, send me a message on Telegram, Instagram, anywhere I could help you out in your understanding of the markets. With that, see you next time.